Now, Donald Trump has reiterated his desire to impose a 10% tariff on China, but has told reporters no date has yet been set. The president also confirming the plan to tax Canadian and Mexican imports to the tune of 25% by the beginning of February. And he says he's comfortable charging higher tariffs on his near neighbours, as he already placed high levies on China during his first term. And of course, the major litmus test for the currency market today is that hike expected by the Bank of Japan. Let's get some further detail. Luca Santos joining us from ACY Securities. Luca, belated.
Good morning.
Happy New Year to you as
Happy New Year as well.
Get our heads around Donald Trump
Lots
and
of
what he has
things,
to say. It's almost a case by the minute, isn't it?
Yeah, every second there's something popping up.
Well, as a result, markets are moving.
Yeah.
Although it has to be said, perhaps not as much as in his first term, where I think markets tended to take him on his word. Now I think there's a little more maturity both on his part and perhaps for the markets. They're saying, well, let's wait until he actually follows through.
Yeah, of course, it's like you learn with mistakes, right? It happened in the past. You know that in the past there was somewhat volatility, but then you learn that, okay, that's not how he played the game. He say he would do something and then he actually do it, but in a bigger period of time, the market just reacts as normal. And I find it pretty interesting, as he say, pretty much demanding that the interest rates go lower now. Of course, you know, a Trump policy, the whole Trump administration is pro-business and he wants the economy to grow. Therefore, he wants business to get borrowing money on a cheaper price, of course. We saw 0% chance of a cut into the FMC next week. And most likely we may have 3 cuts this year. I was going on the safe side for the 1 cut in July or June, July, but I don't think that 25 basis points will be sufficient with the Trump sort of pressure into the central bank. Yes, there are completely different systems, there are completely different things, but there's always that pressure, right? That if something that I do, it's not working, I don't blame myself, I blame the central bank. And that's exactly what the Trump will try to do.
Yeah, it's not going his way. He's going to deflect that criticism.
Exactly.
However, as we well know, we have heard from Jerome Powell. He's been asked the question,
of course,
you know, are you going to relent? Well, no. That's not the course he's going to take. So it remains to be seen, I guess, whether he remains in that position, because maybe the president is going to be very annoyed with the fact they're not cutting.
Exactly, that's exactly the point. And with that pressure that Trump may be putting into FMC, Jerome Powell, they may cut 3 times. I think now it's the question is it possible? Will that be sufficient, as the economy it is right now, sufficient to cut 3 times? Well, we have inflation falling in some instance. The jobs market remains very stable, very strong. Most likely we will have 3 cuts this year, maybe 75 basis points, 50 to 75 basis points cut in 2025 for the Fed. But I don't take off the strength of the US dollar because of the tariffs. Okay, 25% tariffs on Canada, 25% tariffs on Mexico, and I think it's a good trade, actually, a good emerging market trade on USD MXN, the Mexico peso. Most likely long until $23, $24. As USD CAD, same thing. And USD Chinese yuan as well. It's a good trade with the tariff from Trump.
So you say, combined with tariffs plus the prospect that there's going to be no movement on interest rates, that the US dollar is going to maintain its strength at these levels?
Most likely, yeah. On the first half, that's my view. First half of the year, I completely agree on a strong US dollar.
As a result, you feel as though there's going to continue downward pressure on the Aussie?
Oh, of course, yes. I'm actually short Aussie dollar at the moment to 60.61. So most likely, RBA will keep saying, we don't know much what we're doing. Maybe they will start to do a cut.
What if they do cut next month? You see, where do you see the Aussie going?
Down.
Yeah.
I think it's down.
But what? Perhaps breaching 60?
Yeah, 61, 60. Yeah. That's my target. I think I've mentioned that last year. 61 was my target for the first quarter of this year, and we very close to that target. Yeah.
Meanwhile, as I mentioned at the top there, the Bank of Japan making its interest rate decision today, expectations, it will obviously go in the opposite direction to most of its global peers and hike by 25, taking it to 0.5%.
Yeah, 0.5%, yeah.
Why are they doing that?
Well, it's been a while, right? Since Japan have increased the interest rates. It was on a zero interest rate policy for more than a decade. And what I find more interesting is how tricky the Bank of Japan is on forward guidance. They say they will do it like last year, right? Everyone was expecting a hike on July, October, and nothing happened. Only in November, December that actually something moved the market. And last week, I think it was on the 17th, we had Ueda coming into the meeting and say, look, the market is, the inflation is going up, the labor market is stable, why shouldn't we hike the rate? Okay, and that occasionates some sort of fluctuations on the Japanese yen. US dollar JPY immediately started to going down by 0.5%. The pressure is on into the unwind of the carry trade. Most likely, we will see a 25 basis points hike as I fully priced in already. Because if we looked at the USDJPY chart, it has been falling since last week. Today it's on a bit of a consolidation from 2 days ago. But what they will say, what's the forward guidance and what is the reason why they are planning to increase even more into the future, into the second quarter, third quarter, fourth quarter, that's what will drive USDJPY even lower. The 25 basis point, it's already priced in. Everyone knows it's going to go for 0.5%. But what are the next steps? What are they planning to do from now on? That's what remains uncertainty, and that's what we need to listen from Ueda to have more certainty around, shall we unwind the carry trade and short USDJPY, or should we just wait for a better opportunity to re-enter the carry trade on USDJPY to longer?